All right, good morning, trade pros. Welcome to our morning market update for Tuesday, June the 19th of 2018. This is George Papsov, Trade Pro Academy. I hope you guys have had a great day so far or having a great morning, great evening, wherever you might be. Today, we're going to talk about why the market seemingly slumped out of nowhere, but there was indication that this would happen. We're going to talk about why that took place. We're also going to talk about Kim Jong-un's recent meeting with China and a 3-day central banking meeting that's starting today and how that's going to be important for the market. All right, first, let's take a tour around the world. And there is no good news today in terms of bullish markets. Any long-term investors today are scratching their head. Day traders are really going to enjoy this as an opportunity. In Asia, Japan's down 1.8%. Hong Kong's down 2.8%. China's down 3.8%, 4% drop in one single session. Remember, you have 4 days like that, that becomes a bearish market. Bearish markets characterized as a 20% drop or more. So China hypersensitive to this news that we're going to talk about today. Shenzhen down 5.8% in China. Markets are getting slaughtered in Asia. All right. In Europe, at midday, London's down 0.5%. Paris is down 1.1%. And Frankfurt's down 1.3%. So weakness in Europe as well, but Asia's certainly leading the way. Futures in the United States, Dow Jones is down 1.4, S&P is down 1.1, but building out some positive bias, and NASDAQ is down 1.1%. So you got bearish news or bearish markets all across the board globally. There isn't one stock market that's in the green this morning. All right, crude oil's dropped 1.4% to $64.76. And I always like to peek over at crude oil. Now it's 64.64. And the pit session open is 64.83. So crude oil is bearish as well. One of the assets gaining in this type of momentum is the US dollar. That's the only thing that's really bullish. Gold prices are dropping as well as the dollar bids. Gold is flat, like we said, but down in the last couple of sessions. Bitcoin up 0.1%, but still hanging around these mid 6,000s. And I think we're out for mid 4,000 on Bitcoin before we go back up. All right. 10-year Treasury yield down 4 basis points at 2.88. And on today's economic calendar, Fed's Bullard spoke at 7 a.m. Trade pros in the room, the subscription room. I'm going to go over what he said with you guys. 8:30 housing starts came out, and that number was somewhat bullish. We got 1.35 million new housing starts versus 1.311 expected. So that was a little bit of a beat that gave some upside momentum to markets. But the prior month number was revised lower from 1.287 to 1.286. Not a massive revision lower, but the prior was revised to a lower number, while the current month beat expectation for housing starts. Building permits came out at 1.301 million, softer than the 1.350 expected. So that wasn't a good thing, but there were no prior revisions. So overall, housing starts were a mixed number this morning, but they did give a little bit of bullish momentum to the market around 8:30. All right, at 8:55, we had Red Book chain store sales, and that's it for the economic announcers. No more news in today's session. All we're going to be getting is news from these trade wars, any Donald Trump tweets, any responses by the Chinese president, and I'm going to talk about that next. All right, so why are markets lower so much in the Asian session, with Shenzhen leading the way down 5.8%? Well, it's all this trade war. So here's what happened. Donald Trump yesterday, we got news of this yesterday. He asked the U.S. trade representative to identify another $200 billion worth of Chinese products that he's going to put a 10% tariff on. So not only is he doing the 20% on the $50 billion worth of goods, now he's adding 10% on another $200 billion worth of goods. So not something same on $50 billion worth of goods. And now the United States is looking at adding more on $200 billion. That's 1/5 of $1 trillion worth of goods on a balance that they're going to get a tariff. So that wasn't what did it, though. This isn't what killed the market. This next statement single-handedly brought the market to its knees last night. China's Commerce Ministry said the following. He declared the U.S. has initiated a trade war. All right, up until now, we're throwing the term around tariffs back and forth. It could lead to a trade war. China just said, this is it. You've started a trade war. It's been declared. and they're going to retaliate. Once China said this, this indicates they're going to do whatever is possible to start returning some of that aggression back to the United States. The ultimate Hail Mary that China has, their nuclear button, if you will, and I don't think it'll come to this, but if it does, this is going to spark the recession. This could easily be the beginning of a longer term recession. I'm talking 20, 30, 40% drop in equities all across the board. This could have been what started it. And if China does this, easily 20, 30, 40% drop in the markets, maybe more. All they got to do is start selling the treasuries in the United States. You guys are going to see a collapse like you haven't seen before, because what we're going to have to do is find a buyer for them. Who's going to buy them? Maybe Saudi Arabia. But as China selling the treasuries, they got a massive balance of treasury in the United States. As China starts selling treasuries, treasuries are going to be worth less. And Saudi Arabia is going to be pressured because they're going to be losing money. Imagine having a portfolio of assets that's declining on a daily basis. What are you going to do? Add more to your position? All right, the martingale strategy only works so far. So unless Saudi Arabia wants martingale, I don't see anybody buying those treasuries, and they're just going to cause a free fall in treasury prices. The dollar is going to skyrocket, gold's going to rocket up, and markets are going to drop a massive amount. So this has an opportunity to be transitional. This has an opportunity to be pivotal. You're sitting here on Tuesday, June 19th. This could be the start of a bear market. Just be very cautious with what you do out there. For investors, I would say start protecting yourself. Volatility is going to start surging. You still got time to buy some put side protection. And as this trade war develops, you could add more to it. For day traders, this is what a day trader's dream is made of, this kind of volatility. All right. Kim Jong-un will arrive in China today for his third trip in 2018. He's expected to be debriefing the Chinese president on his meeting with the United States. All right, and I've always said this, Kim Jong-un is a lot more aligned with the interests of China than he is with the interests of the United States. So let's see how this goes. I think this entire meeting that they had, Trump and Kim Jong-un, was a little bit more of a facade than anything. Nothing came out of it, and Kim Jong-un is strategic partners with China. And that's a known fact. They do a lot of business together, a lot of trade. They also border together. There's a lot of reason they should be partners. All right. So, anyways, that's interesting. Keep an eye out for that. Any kind of news from China that says, "Oh, well, North Korea ain't going to do anything about the denuclearization," that will add further fuel to the downside. All right. All in all, I'm going to say this: it feels like the risk to the market is to the downside, and I don't think getting long here is worth the opportunity, considering the risk you're going to have to take for it. I think you got to get out of the way here and just watch what happens and start the short rallies, even in the medium term. And that's what institutional traders will be doing as well. They're looking to lighten their book a little bit, lighten the load, and offset some of their positions by selling equities and buying safe haven assets. What does that mean? Equities are going to go down. All right, they have no other way to go. In today's session, I'm going to be looking to the downside. So this sounds like a very bearish morning market update, but I am going to be starting with shorting rallies, and we got a nice little rally going into the U.S. session open. We're going to look to short that. I think the downside will be easier to play in today's session. All right. Last but not least, a 3-day meeting is starting. A 3-day central banking forum is starting in Portugal, and that starts today. Tomorrow, we're going to hear from 4 central banking presidents and chairs. It's going to be from the Bank of Japan, European Central Bank's Mario Draghi, Federal Reserve's Jay Powell, and RBA's Royal Reserve Bank of Australia's President Lowe. So they're all going to talk tomorrow at 9:30 in the morning, right on the market open. There's going to be volatility. While we're having this meeting, markets are looking for any cues of future interest rate paths, any kind of guidance, any kind of information they could use to decide whether or not they're going to raise rates more over the short term. So that's what you're kind of faced with in today's market. You got 3 big things. The biggest of them all is this trade war. Any updates will cause massive market fluctuations. Today, the best thing you can do is trade in a room of professional traders like ours and get yourself access to a news squawk service. You're going to need it. Basically, that means live news feeds that keep you up to date, and they'll read it out. For those of you that aren't familiar with that, we wrote a nice article on the blog. You can head over to our website, check it out, TRADEPROacademy.com. There's actually a news service button at the top menu that you can learn more about. There's a free version of it, I've created a free Twitter feed version. I've given you one that's free to use, and I've given you a paid option that's really worth the money. In today's market, not today in particular, but in today's age of trading, with Donald Trump tweeting 140 characters away from causing massive market moves, you can't afford to not have a news squawk. All right, it's money well spent. I've made my money for this news squawk for the whole year within one day, multiple times this year already. All right. So, anywho, point I'm making is you got to stay up to date. Join our trading room. We got a 14-day trial, risk-free, money-back guarantee. Sign up, come and trade with us, and you guys can experience the edge of trading with a group of trade pros. I'll see you guys tomorrow. Watch out for the market today. I got a feeling this thing could really open to the downside. I know we're down a lot already, over 40 handles overnight from the top to the low. However, there could be more. That could be just the beginning. And one of the dangers is a lot of us trading these days, me in particular, I've been through boom and bust cycles, but a lot of newer traders don't remember or don't know what it's like to see a bearish market. All right. And if you've been buying dips and getting away with it in this bullish market, you got to be particularly cautious and careful, because you're the person at risk to lose your whole account balance on the way down, buying it like that. I've seen bear markets that without 5-point retracements drop 50, 60 handles a day, every single day for a whole week, right? Imagine that kind of price action. So you're informed, do something about it. Of course, it's your money, it's your capital. You have to take action and be responsible for it. We don't run the liability of anything. Your losses are yours, but you could keep your gains as well. If you want to hold me accountable for your losses, I get 50% of your gains. All right, you guys take care. Have yourselves a great day. Be cautious out there. Manage your risk. Trade like a trade pro. See you tomorrow morning at 9 a.m. Very interested to see what happens in today's market. Ton of opportunity. I got to turn around and open up the trading room. Thank you for being with us. Have a great day, YouTube. Trade cautious and make some money. All right, take care. Bye. And I'm back. I know the market. Give me a second.